Hi, thank you everyone for joining me. This is the, I guess you want to call it, we wanted to give people an opportunity who had the Algo program a chance to kind of ask some questions. We got a few questions here on paper, and I'm going to address the questions, but a few of them are not pertinent for today's class. So don't get mad at me if I don't address it. Like, for example, there's one about an option. There's one about helping someone develop a strategy. And what the Person's user group PUG meetings are always designed for are to give people that have John Person's indicators. Another question someone asked, are my indicators available on TradingView? And I'm not sure. Off the top of my head, I'd have to say I'm not sure. I don't know TradingView. Trade Navigator, which is Genesis, TradeStation, Thinkorswim. We have HGSI, and off the top of my head, TradingView's. I think the guys, if it's is the PPS indicator available? The answer would be no. We have a couple others that are available as proprietary indicators with, I believe it is TradingView, if I just caught me off guard with that. But anyway, which would be the PMC and the last conditional change, but not the actual PPS indicators. But anyway, with that said, or Person's pivots for that matter. I just want to say welcome everybody. It's been it's an interesting day. It's been interesting times. It's going to be from just to start. Right now we've got an environment that's now 14 months of a pandemic, and been some really wild action going on. Cryptocurrency explosion. There's so many things to do, and so many ways to trade it. I know that everyone has a lot of choices. There's a lot of opportunities for education out there. And I can't really speak on who's doing what. I can only speak for what I do, and what I always try to be transparent and take responsibility what comes out of my mouth, and teach people the basics and advance education. We do conduct special classes. Some of the classes that we've done in Algo, and before I really begin, I just want to make sure that everyone can hear me and the sound is adequate. A. B, welcome everyone for being here, because I know your time is valuable, as well as free time, family time, trading time. But as always, I try to put out information that's useful and not to burn up your time and to, clog your ears with noise. Bottom line, if everything's good, the sound's good, if you can see the screen in front of you that says Algo PUG meeting today, April 22nd, 4:30 p.m., we're good. There's a disclosure. You should be there. It should be all perfect. Thank you, Jaron, for that. All good, John R. Appreciate it, my friend. George Valle, thank you very much. The last PUG meeting we did, these are free monthly meetings. The key word was they are customer appreciation and free. Generally speaking, we don't have a new indicator to sell every week or every hour for that matter. I mean, I just do what I do, and we just try to help people understand the dynamics of the market. And with that, there are certain tools that we use that help give us an edge in the market. Thanks to this company called TradeStation, where I began using a product back in, I think it was it's always a debate. I was in Florida, so it was either 96 or 97. And the problem with being in Florida is you go, oh yeah, it was sunny out, it was warm, it could have been, if I was in Chicago, I say it was in July, because it's not sunny out and warm in January usually, right? So in Florida, the problem is if you're sitting there going like, yeah, it was sunny out, it was warm, hell, that could have been January, it could have been April, it could have been March, I don't know, it could have been July. But anyway, it was a seminar, it was in Boca, and it was to buy their product. It was an Omega 4.0, and I still have my big 2-inch thick book. I still have my CD. I still have my security block. An old friend at TradeStation said, keep that. It might go into a museum one day, but it's worthless at this point. Anyway, I've been working with TradeStation a long time, and what they did is they allowed people to code their own programming, and it was initially we did well with in the futures. And then as we began the journey of opening up new horizons and new markets, there was Forex, then there was more equities. And then in 2005, and I know that seems a long time ago for some people, but they started really ramping up the availability of these things called exchange traded funds with SLV, which was, I think GLD was in 05. Then they started with the foreign currencies with the FXE. And then it's, you know, it seemed for after that, every hour, every year we had new ETFs. And then they launched, Barclays launched this thing called an ETF on volatility, which was the VXX, which I found to be quite a very viable product to trade in the marketplace. And it was good for a system trading. And that's what the Algo program is all about, how to develop consistency in a trading program to enter a trade based on criteria that you can program in, and based on that, be able to enter and exit. Now, there is some problems with our day and age of trading. The first, as I always like to share with everyone, Murphy's Law. Murphy's Law would be that if you're familiar with Murphy's Law, it's the jinx of all jinxes, and it's something bad happens when you least expect it. And so if you're trading on computerized programming and you need to rely on the internet, there's Murphy's Law at work against you. Your internet could go down and you don't know whether an order was received, sent. You don't know if you're working a stop. You don't know what your position is. So when it comes to Algo, one of the things that we always trained people to do was have a phone number to a trade desk, have the direct number, have a backup plan. If your internet goes down, make sure you have nowadays the availability of a mobile app to check your position. Call a trade desk. Make sure you have the right number. Are you trading futures? Are you trading equities? Some firms have, especially TradeStation, have two different numbers that you can call. So don't call the futures desk if you need an equity desk, and vice versa. Anyway, I wanted to get those disclosures out because, you know, as much as everyone thinks that, and I don't want to be Debbie Downer, but there's been it seems there's a webinar every 5 minutes on how to get rich quick in this world. And the one thing that I do know for sure, there's a lot of BS and a lot of there's a lot of noise out there. The truth is that trading, if it was really easy, that I only needed to study 2 minutes a day and I'd be promised $gazillion, then everyone would be gazillionaires. And you know that's just not the truth. So trading requires discipline, and it requires what I would have to say consistency. And if anything, in this environment, man, there's some activity. And first thing, let's get into it right now. I want to start to address a few things. I've picked out a few choice charts based on some of the most dynamic market structures that have been around. The S&P 500 is the chart to your left. The GBTC, which is a product that's an ETF, that's an OTC, over the counter. Bitcoin, it first came out in, I believe it was I want to say 17, or maybe it was 16. I think it was 17. It was 2017. And then when we came out with our Algo program, I thought Bitcoin, because it was starting to get a lot of popularity, I said, well, this is a pretty decent program. And the only problem, it was OTC, and we were using the signals to help people and the performance on the Bitcoin. And as you can see now, it's something that I think has gotten a lot more popular. It's been a lot more popular. The other program on the very last bit is the VXX, and that's the volatility. This is a very dynamic program. We use this not only running in our live trading room community. Many of you, if you do come into our live trading room, that's one of the things that you see. In fact, I know there's a few people that work during the day and can't join a trade room all the time. There's a lot of people that actually won't even be in real live attendance today because they have either A, other commitments, or B, time constraints throughout the globe. So we have our friends in Europe that are going to bed in Sweden. Lars, we wish you well. I know you'll be watching this video. I wanted to say a shout out to you. I know Chile. I know Jude over there in Singapore. You guys will be watching this later. So, you know, it's you should be sleeping well into snooze time. And we have Martin over in Australia who had some questions as well. And I mean, he's in the future because that's tomorrow. And we're, you know, we're doing a back test study. That's a joke. Sorry. But anyway, so for all the people that had asked questions and said, hey, I'm going to be watching the video, you know, I understand this is a tough time, 4:30 for some people. It's a great time for me after the markets. And it's a great time for a lot of you that are in the markets. You had a little chance for a break, and then we can get in and discuss what the heck the algos are all about. I wanted to just bring into focus the page that we promote or have up live in our live trading room. And you can see we have a 5-minute ES. We have a SPY 60-minute with not a strategy, but with advanced decline breakdown of the S&P 500. And this is a cumulative advanced decline trend line, so to speak. It takes the it differentiates between the advances versus decliners and plots it on a graph. Down below is my proprietary volume tool. This is a SPY model, and this is a leveraged ETF on SPXL. Generally speaking, they're in sync. When the market's very bullish, they'll both be long. Lately, they've been kind of working in the SPY missed a long side trade, but the SPXL picked up a long position. And you know, now this one is short and that one's flat. So it's kind of been an interesting run in the market here. Down below is the VXX and the volatility index. I want to go through that model today. We have a crude oil, which up until the time that crude oil went negative $37 a barrel for the first time in history, an unprecedented event, which should never have occurred, but it did. Nonetheless, margin rates went through the roof. And the funny thing is now crude oil, no one really is that interested in trading it anymore. And actually it's a decent market to trade now. But I think it's once burned, shame on me, twice burned, or is it once burned, shamed on you, twice burned, shamed on me? And so no one want to really go into that. And this is the Bitcoin model that we have in our live trade community. Every time a trade is entered, it populates up on the screen in case someone can't see the entry, which gives the size of the position. It gives the entry, the arrow, if it's a green, or what we sometimes mix it up with different models. Blue, for example, over in VXX, green over here. It's kind of hard to see for certain computers. If it's a connect the dot, if it's a short position and it gets out, it's a green line, connect the dot, real simple. It was a profitable trade. If it's red, like over here, it went long, it got stopped out, it went flat, that's a loser. So you can see it both on the screen and then on the summary table. And so everything is done live, and hopefully, I mean, that's about as transparent as you can get on any platform. And then I give my comments on a daily basis. We gave an SQQ out. This is a 15-minute model. And I want to go through a couple of these with you guys because we've had some questions about it, and I think that's reasonable to go through on today's class about the algo. Now, first and foremost, before you just start programming and start trading automatically, you got to understand a little bit about the market and the tool in which you're using. What is an algo? An algorithm is a set of criterias. What's criterias? Commands. X crosses Y, then take action. If Y crosses X, take action. There's a lot more to just developing an algo strategy. There's holding periods. In fact, that's probably one of the questions I see. Now, let me go through some of these questions so that people know that I did get I print them out even. I personally didn't. Mary does, which is why people tolerate me and they love her. Douglas says, John, I'm launching my algo next month. I seek a coach, not online program. You welcome a conversation. Well, Douglas, this isn't that type of format for that. This is a PUG meeting is designed to help clients that are using our program and our indicators. But as far as a coach is concerned on programming, I'm not sure exactly what a coach would do other than what I'll describe today are important variables that you want to look at when programming and what you need to look at. One of the things I want to talk about here today, and so when you create a program, obviously you want a market that has consistent movement. So futures also offered consistency. And like E-mini S&Ps, a lot of people prefer E-minis because of the volume, which AKA stands for liquidity, being able to get in and get out, and execution. One of the factors that I look at in understanding the performance of a market is I don't know if it's accurate to say as an indicator, but it's called a condition indicator. It's not really I guess it's not a price oscillator. It's not a momentum indicator. It's just a condition of the market in which we're in. And it's called average true range. And a gentleman by the name of Wells Wilder came up with the concept of the average true range. Why is that important? First and foremost, right now we have, and I look at, so I'll disclose what I look at, and you can see it right here. I look at the 10-day ATR. If we go over here to, let's see if I remember how to do everything all at once. 10. So it is true. I'm using 10. So I just wanted to share with you what I'm looking at so that you understand. I use a 10-day ATR. That represents about, well, 2 weeks, right? I want to look at what the average true range of a market is. What is its condition? Is it a wild range? Is it a normal range? And my research had shown a few years back, the average true range between 2013 and 2018, in that 5-year period, the average of the 10-day ATR was around, I think it was 28.9 something. So I like to just make it easy on us and say 30 S&P points. In that 5-year point, we had a 30-point S&P range. Now, sometimes we got into a period 1 month in October, I think it was 2016, we had a lowest reading of ATR. I believe it was something like 14 points. So 14 S&P points, and there's 4 ticks to a point. Now, if you're trading spiders, this is also important to you to understand. If you have a strategy that suggests that in a low, narrow range trading environment, a low ATR environment. So let me just give you through a walkthrough history here. Right now we're at 40 points, and you might think with today's action in the ES, we had a 56-point range. You go, man, that was a violent day. Let me just point out, yes, that was an expansion of the ATR. This morning we walked in, the ATR was around 34 points. Or 36 points, excuse me. We'd started to see a contraction of ATR, which shows that there's a semblance of calmness in the market. In December of 2018, everything was going fine until Jerome Powell decided to raise interest rates, and the 10-day ATR went from about 30, 33 up to 90. If you have 90 S&P point move in a day, on average, over the period of 10 days, you have a strategy, and we'll get to this in a second, but just think of the logic. If you're expecting to only make, and you have a strategy that only takes 3 or 4 points out of the market, 5 points, or 10 points out of the market, that's great. But when you have an environment that's on a 30 ATR day and you're taking 10, you're taking a third, you're trying to take out a third of the range of the market, if you think about it, right? To a degree. That strategy might hold up. But if you have a risk-reward ratio that's based on a smaller daily range, you've obviously, when you get to a 90, you've tripled your 10-day ATR. Your risk mechanism is going to have to expand. Your profit targets will also expand, or should. Now, if you have hard set profit targets and hard set risk targets, that's going to be a potential disaster. Trailing stop functions. By the way, let's fast forward to March of last year, where we only went to a 200, and I'm going to repeat this number, 249 10-day ATR. Holy moly. So by the time we've seen in the last year this ATR come down, it's been a welcome sight of a decline in volatility. So first off, one of the main things is to know your environment. And one tool we use is the ATR. This tells me what the environment is, what kind of ranges are we seeking, are we expanding greater than a 10-day ATR. That tells me there's a change of what? Condition, a change of condition in the market. So for anyone that's developing a strategy, first thing I would want to suggest to you is you probably need to develop a sense of understanding of the ATR in the market. All right, that's number one. So people do that to help them out. So here's one of the things that I wanted to point out to you. When we take a look at a market, and this relates to the next question that someone had asked. So let's get on it. Hold on a minute. I wanted to bring this back to you because I wanted to go over this SQQ. What is SQQ? This is a day trade model, day to overnight. It's designed as an intraday or a swing trade model. This is an inverse ETF. When the NASDAQ goes up, this goes down. When the NASDAQ goes down, this goes up. This particular model runs in our live trading room. Let's take a look at the functions of what we built. And before we even get started, I want to share with you, you can see clearly, this shows what the position size is. It shows the entry. And you'll notice that if you see 1700 and you see down here 896, if you did quick math, you'd probably figure out, hey, he's scaling out of 50%. And if you look over here, you'd see 1700 and you'd say 0. It didn't scale out. What gives? It has different exit strategies programmed. Keith, are you talking GBTC or are you talking about VXX? GBTC. It may have come out in 2011, but I didn't start working with it until 2016. I was giving just in case but I appreciate your insights. It wasn't a thing for me, the GBTC, until it started to see, I think it was 2017 when I started to latch onto it a little bit. I was just being about me, not about the product itself. Thanks for the history though, Keith, I appreciate that. All right, so in looking at SQQ, this particular model, first thing we're gonna go and look at with TradeStation is, again, performance. Anytime you're building a performance strategy, you ask yourself, is it any good? Does it make money, first and foremost? What's the next question I look at is what's the ratio of risk versus reward? And number one, does it have a decent risk max trade drawdown? So bottom line is, I'm sure we could work on things that are a little bit better in this environment. And again, this is a strategy that the couple things that TradeStation has in their strategy that you would want to look at. The first thing is, what is the rate of return, not based on your particular product, but maybe this is a product buy and hold in the last, say, 2 years or 3 years now, excuse me, or 2.5 years. This particular product has lost 95%. So relative inversely, the return on initial capital for this particular program doesn't outperform the market itself. Why? Well, if the NASDAQ has gone straight up for the last 2.5 years almost, then this thing should have gone straight down, and this trades both longs and shorts. So the moral of the story is we take a look at the position graph, and you'll see that it's got a decent equity curve. It's periodic returns. This is a monthly return based on the equity, which we'll talk about in just a second. is $20,000. So this is a model that trades based on a total amount of $20,000. The Algo Optimizer, what we created was we used our own ideas and built a program using TradeStation's technology and built it into their platform. So that's what in case anyone was familiar with what the heck the Algo Optimizer is, that's what this does. So for that, I want to go through a couple things. Let's go into studies, and we're going to hopefully answer some of your questions while I go through a live breakdown. All right. So number one, this is our latest release. We started with Person's Algo. Then it was Algo 1, 2, 3, 4, 16, 17, 17, 1, 2, 3, version 2, number 18. So there's been a lot of releases of things that we've created. The first thing is this particular model trades 24 hours. So if we only wanted to trade open outcry session, I could program this in and say start time 9:30. Let's say 9:30 isn't the right time to start. I could punch in start time and add minutes to start time and find out and optimize when is the best time I should more profitably. Maybe it's not on the open. Maybe it's not the first 15 minutes. Maybe it's the first hour. And I could optimize this to find out what is the best time of day to start trading. If I was trading futures and I wanted to trade the open and the close, I could have two different start times and two different end times. And that's why it's defined as start time 2, end time 2. If I wanted to trade 24 hours and continuously trade, take any signal, then I just leave everything blank. We also developed this thing called a position sizing model. There's 3 different techniques. And this is a direct question that we have as an individual. Let's see. So this is Jose was asking, can the algo do trades with options? I would absolutely say no. First off, to program an option with a bid and an ask, options are a derivative of a market. But what you can do, by the way, Jose, is if you're developing a strategy that has consistency like ES, like Spider, like the VIX, or the VXX in this case, or Bitcoin, GBTC, you could use the strategy that you've built and use it as an indicator. And then if you got a buy signal, instead of going long the individual ETF or product or futures, you can apply an ATM and at the money option. Can the algo do intraday? And the answer is absolutely. How does the algo better entries and exits? Well, it helps to define your exit, your strategies, and your stops. How can I set up my own scans? Well, that's a different question. But anyway, let's answer some of these questions by saying, if I wanted to change my position calc method and I want to do $100,000 with, then you would obviously not want to risk your max trade loss of $820. So, or your max profit of $2,000. So I want to do something real quick and I probably shouldn't do this in a live class, but I'm going to do this anyway. I'm going to just show you the technology of TradeStation, but what we did with our ideas. I want to optimize. Is now the environment that I should have $2,000? Let's say, for example, the volatility is changing right now. There's a couple things that I want to take a look at, gang. Maybe now's the time that I need to what's called maintenance, not curve fit. Don't confuse the two terms, but I want to maintain a strategy. When would you maintain a strategy? When you have a change in condition. If you go through a period of heightened volatility and your strategy is knocking out of the ballpark, it's because your holding period or your profit and your trailing stop functions are in sync and you're letting positions ride because the market's trending and making big moves. I hope that makes sense. But if you get into a narrow trading range type environment over a period of time and you're starting to see consistent vol crush, meaning volatility is starting to come in, how can you take $2,000 out of the market when the market's only willing to give you $500? So something has to change. You either have to tighten up your stops or reduce your profit target, right? So I'm just going to do this to share with you one of the things that you would look at if you're looking at ATR and it's contracting and you have a very high, wide profit margin and you're giving back a lot of profits, is because your strategy was developed in a period of higher volatility or wider trading range environment. So you can easily, by just clicking on and optimize, and you can say, well, listen, I think if I'm risking $820, and you can actually optimize both at the same time. But for practical purposes, I'm just going to run this right now just to share with you how it performs and what you would do in a period of changing volatility. All right. Now, this is going to take like no time at all. It's done. There it is. So bottom line, we go back, and I didn't write it down, but I would always suggest to save your work. You'd edit your strategy, customize, and you can see that it didn't change off $2,000. So here's what I would do to say, well, okay, that's interesting. We have $100. So maybe I go 1,900 and maybe just tweak it a little bit and run that down to fine tune it and go $2,100. And let's go maybe $50. And that's the jump rate increment, and run that scan or that optimization one more time. So this is again, SQQ. I'm just taking it off of what we have in our live trading room. I'm not changing it in the live trading room. So if you're in the live trading room, you go, John, you changed the thing. What the heck? No, I'm not changing anything. This is a separate workspace. We're not changing a thing. So let's double check, go to studies, and we're going to edit strategy. And the first thing that we're going to do, customize. This is another way of doing it. $2,000, man. What about the risk? Can we reduce our risk? Maybe make it a little bit more profitable. And in this case, since I know 820 was the number, let's go with $1,200. I do not want to risk more than 820, but let's just see what the system says, and we'll just run that optimization with that kind of a wide range. So in essence, I'm just giving you the capabilities of what can happen, and as you can see, because we are starting to see maybe the equity in the SQQ when we first ran this program, let's double check something here. The performance graph got a little bit better. Our percent rate of return up just a tad, not dramatically. Our monthly periodic returns, it's not that big of a change. So what did I just do to my strategy? If I go over here to edit, let's see, studies, edit strategy one more time. I got too many monitors. We'll bring this down into space, go to customize, and you'll notice that it just jumped up to $1,100. You know, I would have to look at the numbers and look, when I say the numbers, I'd have to look at a few other items if I was really going to change that to $1,100, because if the profit, if my risk is increased per trade, by the way, friends, if my risk is increased per trade, and my profit overall hasn't improved, this might only be sharing with me one or two trades had a better outcome with increasing my risk. I'm not interested in doing that. So it's really, in this essence, the devil is in the detail. And how I try to develop a strategy is I do a couple things. First and foremost is I understand, and I will teach, and that's what we try to do with this program, is to teach people some of these other variables. For example, how much time is spent to make a winning trade? On average, 12 bars for a winning trade on longs. And here's the interesting aspect, 17 on shorts. Now remember, this is an inverse ETF, which means if you're going to be in the stock market, stocks go down a lot faster than they go up. So when a market goes on an inverse ETF, this sounds, I hope this isn't confusing anyone, but that kind of makes sense because if you're long SQQ, that means you're short the NASDAQ. And the NASDAQ, if it's going to go down, it goes down fast and furious. So your holding period to make profits is probably less than it would be if you're bullish the overall market. So, okay, I mean, you've heard that term before. Stocks go down a lot faster than they go up, right? And this actually kind of helps support that idea. So it makes sense that if I'm in a trade, look, after about the 9th or the 10th bar and I don't have a profit, either way, your holding period is probably on average not going to perform for you. That's the average bars in a winning trade, and that's the average bar in a losing trade. So you can discuss and have not discuss, but you can have a viewpoint that says, hey, there's a setting that says a holding period. Maybe I should decrease or increase my holding period. And so let's do and take a look at that function. So we're going to edit strategy and we're going to customize. I'm going to scroll down because that's one of the things that we built into this is max trading bars. So the max trading bar optimized here at 27. So I'm going to go and I'm going to say, let's double check something. I'm going to optimize this out. I'm going to say, we just saw where 9 bars, the average holding period on losers, 8 or 9. So let's start with 8. And that's the function of looking at the system. What's the average time in a losing trade? Well, on average, both winners, both longs and shorts was around 9 or 10, right? So let's start with, let's go into 7. So we don't have to go to 0. We'll just go to 7. And we'll stop at 40. We'll do it at a 2-point increment jump rate. We should do 1, but you'll see this in just a second. This helps speed up the process. So this is max trading bar 27. So you can clearly see, you know what? It hasn't really changed much. So let's go back and we're going to go to studies. I'm going to edit the strategy. It keeps jumping up into a different window. I'll bring it back into view for you. There it is. All right. All right, 27. Now we had a jump rate of 2. I don't think the profitability is going to increase much. So we'll go 25 and we'll go 30. And this would be another way that you could do what's called fine tuning it and then change it to 1. 1 bar may make a difference between the close and the open. 1 bar may also make the difference between more or less profits. So at this point in time, we run the optimization. It's only going to take a few seconds. And it still won't budge off 27. So, by the way, gang, in the live trading room, we're not changing the model. There's no need to change it. This is going back, by the way. Make sure that I go to my time frame and let's customize. And we're going back 30 months. 30 months. How many trades were generated in that 30 months? If there's only 2 trades, and that's another thing you want to watch for. Now, again, this is a 15-minute chart. So we're not going to go 10 years on a 15-minute chart to back test. I want to back test, and I also want to look at the relevance of its performance. This one runs live in the room, by the way. So anytime I'm going to do a back test, I want to make sure that I'm not run different segments of time and run different segments of market conditions. If I got a long and a short program, I mean, does it work well in just up markets or just down markets? I want a strategy that works well in up and down markets, right? And I think this is that type of model. I mean, it's been down, it goes up, it's been sideways, and that's just, as you can see, back from 4.6. All right, let's go and look at the performance one more time. Go to edit the strategy. I don't know why it keeps wanting to default there, and I keep Bringing it to your picture. All right. So I'm not going to change it off 27, number one. I have my holding period seems to be good. My risk reward ratio is another thing that I could look at. Maybe that needs to change. This optimized at 2.2. It only takes buy signals and it won't reverse. Now, this is another thing that we programmed in, gang. Let's say you're in a market in a long position. Starting from top to bottom, I can define this program to trade all hours, some hours, and I can optimize it to no hours or only a specific window of time. I can put it in as a position strategy. Now, I went through this and said this particular model is trading a $20,000 equity account, $20,000, and that's position calc method on position value. I could change that number to 2 and say, you know what? Put me in as many shares as possible per trade. I want to risk only $1,000. So you're risking 5% of your account. By the way, I'm going to do that right now. And just to share with you what may happen when you do things accidentally. It has a different dynamics. It makes a lot more money. It's got a lot more risk. I just went from a risk factor of under, what was it, $1,100 to $6,800. Holy moly, that's your drawdown. So the point that we want to make, and now look at the return on initial capital is 136%. So you have more profitability, but what we like to say is at what expense? What's the cost of doing that business? What's the cost of doing the business? Are you willing to risk that much money from a net max drawdown period? How many trades did this thing do? 1,300. So obviously, you know, you have a cost of doing business. Commissions aren't entirely free everywhere, right? But there is a slight cost of doing business. So obviously, when you change a setting, you have the flexibility of changing things, but you better be careful of what you change. Anyway, I just wanted to share that with you because someone had asked me. And one of the questions is, what's the difference between position size 1 and 2? So what's really cool about doing these PUG meetings and asking questions is I can dissect a program that we are using currently live in our trading room, kind of share it with you guys, and then go through, answer your question, so to speak, by just demonstrating the program a little better. That's all, right? Now, we're going back to position calc method, which is position value. Only get me in as many shares as possible as my account can handle. If you don't like 20,000, we do some other things that we'd have to tweak, risk, reward, things of that nature. Position risk, you just saw what happened with the performance. Now, position calculated number 3 is if you wanted to have stagnant lot size. I only want to trade 500 shares every time I get into a trade. Well, let me ask you a question. 500 shares, if the SQQ went to 10, is a lot different than SQQ going to 20. It's doubled, right? So the percent change, you also need to understand the value of the product that you're trading. You don't want to get into too many positions. You want your position value to be, commensurate to the product pricing. Which, by the way, I wanted to tell everyone, it is Thursday, last I checked. Today, because of the close, we're tomorrow, the program, the VXX, it's going for a 1-for-4 reverse split based on today's settlement price. Tomorrow morning, when we wake up in the open outcry, the VXX, it's not like the market had a big disastrous decline. The VXX did a reverse 1-for-4 split. And that is, as I understand, the 5th time in its inception that they've done a 1-for-4 reverse split, the VXX, the volatility exchange traded note, just to give that out there for you guys. Okay. All right. Moving forward. Now, this is a function that if you were a day trader, you'd say, hey, I want to risk $800 to make 2,000 every day. But man, after the 4th losing trade in a row, I'm out. Is that the right number? I don't know. This is an overnight trade, so that would be an irrelevant number. We could actually set that at 0. We could go to 7. It's not going to optimize because we don't have an intraday program built. In other words, if I had this set at 9:45 and I had end time at 3:30, it would only take trades between, and I'll do that with you right now. Let's go 9:45 just for the heck of it. And end time, let's go 3:45. And this is Eastern Standard Time that it's doing. And if I change that dynamics, I'm not going to optimize. I'm just going to change the dynamics. Oops, it's going to optimize anyway. Oops, didn't want to do that. So it's not going to take any trades. Let me go back. I didn't want to do that. I hit the wrong button. My bad. As you can see, this gives you a lot of things that you can do. Exit end of day is it set at 0. 0 is false, 1 is true. Get me out. Now we're going to sit there and say, only get me into trades between those hours and get out at the end of the day. And we'd have to optimize a few other items. And then it would only take day trades in between a certain time of the day. If you wanted to take these trades during end of day or intraday time frame, so you could develop your own program. All right, let me go back and fix that. And it's easy to do. 0, 0, 0, and we go back to the beginning. In developing a strategy, we're going to set that at 0 because it's an end of day deal. It defaulted by the max number. So let's go back and say, well, what if we have an expanded ATR environment? What are the things that I would probably benefit most of all? And a couple little things that I will teach you right now that are important. We know that we can optimize the time of day, the number of times per day, position sizing. We have money management, max loss, max profit. This is a function that someone was asking, and I believe Hamdi had asked, the idea to use PPS buy and sell signals exclusively without any additional money management or exit strategy. Can I help with that? You want to set up a strategy using position calc method 1 that goes long on a buy and 2 that liquidates sells. No. The question that I wanted to get through in this particular example is if I have a long only strategy or a short only strategy, which we've developed, by the way. In fact, I'll get into that in a second. Start trailing percent. This is telling me that I want, if I'm long a market and this has the entry and it has blue as the profit target, red is the initial risk. These little light gray lines is a further out trailing stop basis. And the orange is the emergency stop. That's all these colors that I just went through, if you could see that, is all dependent on exit strategy section 4. It's going to start trailing when your entry is long the market and you're within 36% of your max profit, which is the blue line. It's going to jam a stop 25% of the way of your entry to the current price. And that would be that gold line. So regardless, if the market goes and it almost goes up, it'll stop you out. As you can see here, the gold line was put in and it got out of half the position at boom, the gold line. That's an emergency stop on half the position. And you can see where it has scale out at half the position. Interesting. We actually programmed something that could say, hey, should I scale out of anything? No. Or should I scale out of something? Yes. So it's 0, 1. And for this example, we're going to go, since it's share price, let's go with a 0.10 factor. So 10%, 20%, 30%, 40%. I don't know what the right answer is. Let TradeStation figure this out for us and optimize it. So right now it's estimating. It should be done. We're just doing a quick little mini strategy setup here just to share with you. And it just, at this point in time, it said, well, the profitability, double check here. Studies, edit strategy, excuse me, different window. Come on down, hit customize. So bottom line is we went and it wants to scale out of 20% of the trade. I'm not sure I want that done. So if I want that back to where it was, I'm going to go just say 50%. I'm not sure I'm a big thing with that. I can go and start trailing and optimize my function between whatever I think is the right number. I don't know, but I'm going to go with a wide range of where I get in. Where do I want an emergency stop put in? I want it done in terms of percent change, and I want a trailing figure placed on that. And this optimization will figure that out for you. By the way, we also can override that with several different stop functions. And this is what made this very exquisite. Last conditional change is one method of trailing stop. And many of you are familiar with the last conditional change. So it's 0-1 function. A dynamic exit. That was something that we built in this last version. What is dynamic exit? Dynamic exit took the difference. It was really a neat concept that overrode the last conditional change. It took the average of the last conditional change. Instead of having maybe one that's too close, it took the average of several of the last conditional change supports, and it made it so that we had a dynamic exit on average of last conditional changes, and that's where we had calculated that. Compression exit, we used a combination of a few things. Listen to this carefully. This is cool. The compression exit had to do with average true range and last conditional change. We combine the two. Now, if your average true range, by the way, is 50 points, that would be 5 ATRs before the compression stop kicked in. That's pretty brutal, right? So what this did was, do we want to use, what type of stop mechanism do we want? What's the best type of stop in this environment? Is it a timing element? Because the compression exit added a timing element. It tightened up the stops. The longer the trend took place, the tighter the stop became. And that was to help see if we had better profitability on the trade. So anyway, use compression exit. I don't know if we should use it or not. Let the computer tell us. 0-1-1. Okay? When should we kick the compression exit in? On a half of an ATR? A 12 ATR? I don't think so. Let's just go to 7, for example, and let's use a half-point jump rate, and we'll see if I've not created a monster. But I just wanted, for demonstration purposes, to share with you the power or the combination of finding out which stop method works best for your program. So for those that have the Algo 17, that's the whole point of having our discussion, is to share with you what is the order of things that I can do. Number one, can I optimize these in unison? Number two, and how do I check my strategy performance and statistics with my settings? All right. And that's like we go back and we can look at our performance and we could say, did I disimprove or did I improve? And you can clearly say, whatever I did, I goofed it all up. I mean, you haven't seen any performance out of this trade since October. I mean, it just doesn't work. So again, what did we do that altered these settings? So we go up to studies and we can edit studies. And that's where you want to make sure, edit strategies. Go back and go to studies, edit strategy. Here we go. There it is. It's in the other window. I don't know why it will do this. Go to customize. I want to say, well, what the heck did we do that dramatically changed this? And it jumped the ATR to 6.5. Well, that might be, maybe we needed to address that a little with the risk reward ratio and the trailing stop function, which is right here. Start trailing function and trail factor. So if we want to go back, you want to optimize those out again. And when we go through this, what I'm going to do, by the way, is this will not be, as you'll notice here, if I may be so bold, for those that are in the live trading room, they're going, Person, what the hell did you do to our program? We like that program. What I'm going to do is, you'll see here in just a quick second, I'm just going to go and close the workspace out right now. And I want to make sure, do I want to save? Because I was goofing around in something I had no business goofing around in. I did this for demonstrated purposes only. So what I want to do is, I don't want to save any of the work we did. I want it back to the original. So when you guys come into the live trading room tomorrow, you go, hey, were you, which strategy are we using? We're using the original one, just to throw that out there. When you're looking at an algo, the question is, first and foremost, it's a matter of building a strategy that has consistency, number one. It's, as you can see, we also have, do I believe in a strategy and entry? Do I want to see where my risk factor is? Do I want to know what the profit target is? How many times do you have the expectation of hitting a profit target, but the market has a different, entirely different objective? It ain't going to hit your profit target. So a trailing stop function is very key, critical. And for example, in our GBTC model, which I believe we created this last year, and I had it running, which we had an older model. And I said, you know what, we'll run this side by side. Let's double check here. This is the GBTC. I want to make sure this is, bear with me a minute. Version 18. We had this model working. That's an old model. The difference between the Person Algo Strategy 16 and 17 is, quite frankly, we didn't have this last conditional change. We didn't have the dynamic exit, and we didn't have compression exits built in. So this particular model clicked into, you know, a better profitability. It clicked in with better risk parameter on max drawdown. Its performance was much better over time. This has been running live. I believe we had this live, if I'm not mistaken, since just because I'm old and I can't remember CRS problems. I thought January, it may have been February, but we've had this running in the live trading room since. I decided we ran both models, the old 16 and this one side by side. I said I had enough, that's it. And a couple weeks ago, we got rid of the old model because this was the one we wanted to stick with. Why? Because one model was doing a little, this model was, it missed a couple trades. You can see there, it did not pick up a long, the other one did, but this one had better risk mechanisms. And the performance was just overall much better. So when you're developing a strategy, the first and foremost thing is to understand, what are you asking the market to return to you? Number one. Number two, I mean, here you got a market GBTC, whether it's representation of Bitcoin or not. Bottom line is it does follow cryptocurrency. If you have a strategy that's going long, whether you want to buy this or not, the bottom line is it has a long and it's going to trail a stop. And got to understand something. Any strategy is not going to buy the low and sell the high of each move. And there's going to be times where it gets long and you're going to want to get stopped out. You don't know what it, I mean, can you imagine being long and then holding the whole thing and getting out down there? You want something to exit based on your criteria. What's my risk factor? These are the things that I think are critical for any program strategist that's saying, hey, I want something that gives me decent returns for the cost of money, the risk factor, i.e. risk. The performance summary on this one, and by the way, on the settings, I'll share some of the settings with you. This is based on a $100,000 account on GBTC. Well, first and foremost, it's a $40 instrument, not a $10 instrument. So you'd figure if you got a $10 instrument like SQQ, $20,000, do the math, you know, you're pretty close to the same type of money management, right? The max trade loss on this, 770. The max take profit is 1,400. Can you trade both sides of this market, long and short? Some people with over-the-counter products have a problem, but as far as a guide, as a gauge, I mean, these are what we develop strategies for, is to help us give not my opinion of the market, but a technical purpose, and to say, hey, do I trust these signals? Over time, the signals have provided decent returns. At what cost? Nothing is free in this world. Looking at this particular model, for example, and I'm not cherry picking, the annual rate return or the buy and hold return is off the charts for GBTC, 3,078%. The performance of this particular strategy has a profit factor on longs of 2.14, which is pretty decent. Adjusted profit factor of 1.82. 60% of its trades are profitable. That means not every trade's a winner, gang. It means that 4 out of 10 trades are going to lose. That means it's more of a realistic way of looking at how you trade the market. Not every trade's going to be a winner, but instead of buying the high and riding it all the way down, at least you understand that, you know, when it's long and it gets out, it's probably getting out for a darn good reason. Any event, we've exceeded our time by a few minutes. I want everybody to say, I hope I try to answer as many questions as possible in a live forum on our product that we have, so that you have a better understanding of what you can do with this program. Thank you for joining me today. I think, you know, for the environment we're in, you know, this is a whole different world of what we can trade and how we can trade things. And I think that with the Algo Optimizer, for those that use it, and for our live trading community, it gives a better edge in the environment. So thank you all very much. And if I didn't answer your question, you know, some took a lot of time. I see one by Keith. You did. You're right here. You're like the next one. You did have a couple questions. You asked, is it available on TradingView? The PPS indicator, no. Please describe what information is passed along during the daily trading sessions. What's the overall goal of those sessions? The overall goal of the session is to give guidance in the market and to run these strategies so people can see them live. Blah, blah, blah. Stocks, and I just shared with you that in the room, what we have in the algo and what we have in the main trading room are we have the SPY, Qs, whatever trade is in the advisory service, the newsletter, Labu was one trade, Intel, CAG, which is Continental Grain, excuse me, ConAgra. Continental Grain is what it used to be called. Some people call it Conagra. I don't know why. Johnson & Johnson, JetBlue, Schlumberger, Kinder Morgan, Insight Pharmaceuticals. So a lot of this is think or swim over here. That's what we do in our live trading room. And if I didn't get to every question, let's see. I had the same question about max take profit. Max trade. I hope I answered that question. How's the max trade loss parameter used? Bottom line. Let's see. What else do we got? So hopefully I gave Handy a shot, Jose a shot. Let's see. We had Ben a shot. We had Keith. I hope I got some of your questions, and then the rest, we're out of time. So anyway, thank you all very much. Thank you, George. I hope, again, it gives you an idea of what the capabilities and what we can do in algo programming. It's not just about a simple buy and sell. It's about trailing stops. It's about money management. It's about what's the cost of doing business. It's about looking at your performance and saying, what's the average winning time in a winning trade, a losing trade? And we can help build. Also, what are the factors and the conditions we want to look at? If you're trying to take $50 out of a market that's moving $10,000 worth, you better up your profit target. If you're trying to take $10,000 out of a market on your trade system and the market dynamics is only giving you $50, boy, you better trade and do a maintenance update on your strategy. Thanks, everybody, for joining me today. I hope you got your money's worth at least. And with that said, for our live trading members, thank you for being with me again. I'll see you in the morning, day in, day out. Thanks, everybody. Have a great evening.